Paying yourself in an LLC can be daunting, because not only do you need to know how to pay yourself, you need to know how to pay yourself in a way that won't get you in trouble come tax time. Now, if you're not sure what an LLC is or how to form one, check out our other videos, What is an LLC and How to Form an LLC, linked below. In this video, we'll go over how to pay yourself in a single member LLC and how to pay yourself in a multi-member LLC. The general principles to paying yourself in both a single and multi-member LLC are to make sure you keep your business and personal finances separate, and to keep in mind that LLCs have pass-through taxation. Keeping your business and personal finances separate is simple. You'll just want to make sure you have a separate business bank account and separate business credit card. You'll also want to make sure you never use your business's money to pay for personal expenses and never use your personal finances to pay for business expenses. Pass-through taxation means that all of the LLC's profits are passed through to LLC members' individual tax returns. Those members then must pay self-employment and income tax on their share of the LLC's profits. It's a good idea for members to put aside roughly 35% of their distribution in order to pay for taxes. Any money not reinvested into the LLC in the same tax year will be taxed regardless of whether that money is kept in the company or given out to the members as distributions. Paying yourself in a single member LLC is simple. After determining how much you want to pay yourself, simply transfer the money from your business account to your personal account. This can be done by writing a check from the business to yourself or by transferring the money from your business bank account to your personal bank account. By transferring the money from your business account to your personal account, you ensure that you aren't using your business's finances to pay for personal expenses. If you were to just use your business's bank account to pay for personal things, instead of transferring the money to your personal account and paying yourself, you'd be commingling your finances and would break the corporate veil. For more information on the corporate veil, check out our other video, What is the Corporate Veil, linked below. The important thing is to keep a record of any money transfers. Receipts and a paper trail will help show you've been paying yourself correctly if there's any concerns of commingling finances. The first step to paying yourself in a multi-member LLC is by clearly outlining in your LLC's operating agreement how much each member is paid. In the operating agreement, you'll outline how much of profits are reinvested back into the company and how much of profits are given to each member as a distribution. You have a few ways to determine how each member is paid. You can use guaranteed distributions, or you can give out distributions based on members' stake in the company. You can also use a combination of the two. A guaranteed distribution is a distribution that's paid out to a member as a set amount at a regular interval. LLC members cannot be employees and cannot take a salary, so a guaranteed distribution would take the place of a salary. If you have one member of an LLC who's working the LLC full-time, and other members are just investors who are working another job full-time, you might want to give the member working the LLC a guaranteed distribution to compensate them for the time they're spending working the LLC. Paying members distributions based on stake is simply taking profits and dividing it by percentage of ownership. So if you were to have 4 members who each owned 25% of the company, then they would each get 25% of the profits. Like a single member LLC, in a multi-member LLC, in order to actually pay your members, you simply need to transfer money from the business bank account to the individual members' personal bank accounts. Again, it's very important to clearly outline how and when members are paid their distributions to avoid any conflict or confusion. If you're an LLC with S Corp Tax Status, paying yourself is slightly different. As an S Corp, members can be employees and take a salary, as well as receive distributions. For a more detailed breakdown of S Corps, check out our other video, LLC versus S Corp, linked below. For an even more detailed breakdown on how to pay yourself in an LLC, check out our pages linked below. And if you enjoyed this video, give it a quick like, and if you want to see more entrepreneurial content, subscribe to our channel. Paying yourself in a single member LLC is easy. After determining how much you want to pay yourself, simply transfer that money from your business account to your personal account. The first step to paying yourself and other members of a multi-member LLC is to clearly outline how and when members are paid. You can use guaranteed distributions, distributions based on stake, or a combination of the two. Then, to actually pay the members, like a single member LLC, simply transfer the money from your business account to the individual members' personal accounts. For more guides, check out howtostartanllc.com. There we provide all sorts of free resources and tools to help with the formation and operation of your business. Good luck starting your small business.